Kelvin 不要跳 Kelvin! Welcome back to episode 11 of the Backholder Pod. First and foremost, I think I just wanted to say Happy New Year to all of you. Hope 2023 will be a great investing year. So I think just to kickstart the entire video, you saw a short skit. Don't worry, even though we are by the Rocho River, none of us are going to take our lives. So it's all in the name of fun and games. But I think just to kickstart the new year, I think based on yesterday's trading day, Tesla was eventually down like more than 10%. I think maybe we can just give a short update for fellow Tesla backholders as well. What exactly is happening, Eric?
I think the production and deliveries were like not very ideal. It's short of the Wall Street consensus. So I think the crowd is pretty disappointed lah. That's why they sell Tesla down by quite a lot. For me, I'm in like the acceptance stage already. You know the curve, right? Investor feelings, emotional cycle. Yeah, so I've gone past the angry stage. Like I was pretty angry at about 200. now I've come to accept that this is life. This is life, and this is holding your backs well. That's why we are backholder spot.
So have you been averaging down?
No, I have not been averaging down. Like last year, I bought 2 trenches, like about 10k, but I stopped after that. I think the last time I bought was in somewhere in May, if I don't remember wrongly, about 215. So that was the part I was still a little bit angry. Like, how can it go so low? So now I'm fully accepting of the fact what has happened. And yeah, it's pretty tranquil now. Just
That's
like
really acceptance.
the river behind us. Yeah.
Right, then for Kelvin, I wanted to throw the question to you. I know I recently saw your portfolio update, right? Even though your Tesla was down like 180,000, your options income was 120. So it essentially negated all the losses on your Tesla.
For
So
now.
how's your put and call options going now?
I have 3 puts, 140 strike went into the money.
Right.
But I think it's alright, right? Because right, we just look at the I think all of us are panicking now is because we are focusing on the short-term stuff. So like this river, right? You're just seeing the short part of the river. If you just drag it over the long term, I think Tesla's it should recover, right? As long as Elon Musk doesn't destroy the company. So but if they do, if he continues his stupid stuff, I might consider selling already. So but for
Selling put.
Sell put or sell the stock?
sell the stock.
Oh.
So he's destroying his own mode lah. So
Okay.
but for now I think it's still intact. So I'll be planning to hold on for a while, planning to sell calls for a while more to negate my losses lah. Yeah.
Then I think for Bunti, right, I know recently, just yesterday, you have been posting a lot of things on your Twitter, that there's a lot of Twitter threads surrounding this entire Tesla discussion. So one, just your opinion in how this whole thing is currently unfolding.
Yeah, I think on the short term, I agree with what Eric just said. Like the delivery numbers really disappoints, right? But for me, I look at the trajectory of the production and the growth is still up, right? So they just have a record quarter. So if they can just maintain about, let's say, just 30%, right, which is low compared to estimate like the expected delivery. But to me, 30%, if they can last it for 2 or 3 years, still a big numbers. So I mean, 400,000 delivery per quarter, that's 1.6 million. That's not a small amount, yeah. So I think the next thing to watch is really the margin, because towards the end of December, they already give a lot of discount. Right. So I think that one will hit into their margin. So I think that's the number to
Bunti,
watch.
I want to ask you, right, and Kelvin also, what do you think will be the new operating and net margin for Tesla Q4? I'm quite interested to know what you all think.
Yeah, I think in terms of profits, absolute number, I think it will either stagnant or drop slightly. So it might be like a negative EPS growth. So I'm expecting to see that, if not the Q4 quarter, it will be happening in this year. So that's my expectations. But I don't expect like it drop by like 20%, that kind of drop. I don't expect so, because the sales is still higher. Sales higher, margin lower, multiply, could be like offset each other. So maybe close to zero
So
or
you're
slightly
saying
negative.
if it actually goes like a little bit negative, like 20%,
Yeah.
we should expect another leg down.
Yeah. I think
20% is not a little bit though. I don't think 20% is a little bit.
That's why.
Yeah.
But it's still possible, right? We drop the margin, maybe minus
I think-
10.
I think on that front, Elon Musk recently just tweeted, right? Like
Mhm.
people ask him how is Tesla gonna be profitable. He said by volume, not really by margins. If I'm not wrong, I'll go and screenshot the tweet out.
Kelvin leh?
Yeah, wanted Kelvin's
I
perspective.
don't
as well.
exactly know all the number stuff lah. So I would say like this year, that deliveries are expected to drop, right? So that means how much they earn is going to drop. But end of this year there will be that Cybertruck, but I don't think it will be ramped up that fast. So earliest we can see the effect of Cybertruck will be next year.
Yeah.
So this year will be super bad. By next year we should enter. By end of this year we should be in a recession already, which means that the car sales will be even lower by the end of this year. By next year, hopefully, if the recession recovers,
Wait, recession, you mean
a US
by
recession
definition of economic terms or by Mr. Biden's definition?
by Mr. Biden's lah. So the
Oh.
economy will be in a worse state. People will be losing jobs. Unemployment rate will go up.
Mhm.
That kind of recession lah. Not the technical kind.
The real one.
the real one. I don't think this recession will last long, because if a recession did come, the Fed won't be continuing their rate hike already. So which is already expected to end by end of this year mah. So there are expectations that they'll be lowering rates by end of this year. So when that happens, I think we have already seen the worst for the stock market already lah.
You ask
Yeah. I wanna ask a question. What is your predictions for 2023? What will the final rate be for this year?
Bunti, you wanna start?
I think it will slow down the rate hike. So 25 basis point hike every meetings. So it will just keep on climbing until 5% each.
5% and
Yeah.
hold it there?
And hold it there.
Okay.
And hold it there for longer than what we expect, meaning that it will last until next year.
Next year. So you're expecting inflation to not come down meaningfully lah.
I think this meaningfully also depends on how it is interpreted, because let's say for you and me, we might be seeing 4% and think, wow, it's already much lower than
Yeah,
9%,
yeah.
right? But who knows, like Jerome Powell can sometimes just come out and say actually 4% is still high, it's still not a number that he likes. So he might just press on there, longer than we expect. Yeah,
So you're saying 5%.
yeah,
For the whole
five
year.
each percent. Let's say 5 to 5.5%.
Wow, 5 point.
I actually share similar sentiments to Bunti though. I think in one of my live streams previously, I also made a prediction that they're gonna hold this terminal rate much longer, and by terminal rate I'm also expecting around 5 to 5.25%. So I think two fronts. Number one, I think inflation is a lot more stickier than we might think. So let's not forget that even though that time the peak inflation was 9% right? So when the new year comes, if there is no inflation, it should be 0% year on year. So if it's still 4%, it's a 4% on a high base. You get what I mean, right?
Yeah.
Because every year they will keep
Rebasing
it's a year on year, yeah.
yeah.
So if it still stays at 3% or 4%, actually it's a very dangerous number. Because inflation will just keep compounding our portfolio compounds, right? Inflation also compounds at that kind of percentage.
GST
increase.
also compounding.
Yeah, so
FYI.
that's why. So I think that's a concern. And if inflation is sticky, then they need to retain rates higher. And number two is I would think, since everybody is expecting a market rally at the second half of the year, we'll see how it goes. But I personally don't think so. I think we'll just up, down, left, right, turn one round, and then the S&P 500 will go back to square
Okay,
one.
both of them 5 to 5.5,
Yeah,
right?
correct.
Kelvin?
Mine is around like 5.1 lah. It's also around there lah, around there.
Right.
It's around there. Like if you see the inflation, what's the current inflation number? Is it 7%?
7%. Yeah.
Yeah. So by middle of this year, it should go down to about 6, 5, around there lah. So it'll be about the same rate as the interest rate currently, which means that they have already reached the terminal rates. I also think that inflation won't go down that fast. There are already projections that inflation will only go back to 2% by 2025, so not that fast. But I would think that it will be a slow downwards. The market rally, I don't think it will be this year. I'm just saying the crash would have ended by end of this year. So market wouldn't go another further down like 50-60%. Hopefully lah. I'm not saying it won't.
Don't jump.
Yeah, so I think we might have already seen the worst near the bottom by either end of this year or somewhere early half of next year lah. That's my prediction. But then the recession will come. It will end within 1 year. That's my predictions lah. And 1 year, which means that by end of next year, 2024, the recession will have ended lah.
Okay.
I think on I want to add on the inflation part. I think if you look at the inflation, right, we only look at the big numbers, right, like what 7% that one. If you look at the components, also it looks quite scary because I think in the first round when the inflation keep on going up to 7, 8, 9%, right, that's I think the biggest component is actually energy. Energy prices has went up and so on. And recent months, right, actually energy prices already came down. But the other components is actually trending up slowly, like those services, salary, and so on. So I think that one is more sticky. So that's why I think that's also the reason why the Fed is very concerned.
That's also you still haven't counted in the inflation for the house shelter. So by March or April, shelter would have already come down, so which would bring down inflation as a whole lah. So, but in these 3 months, there's the whole winter heating thing. So energy would go back up again. But after winter comes, spring comes, then inflation will start to trend down on the whole.
I think for this sticky inflation part that what Bunti suggested, right, especially on like services or food, right, you think about it, we all keep complaining in our own everyday life. You go down, you see your cai fan, it increases in price, your bak chor mee increased to $4-5. Even if inflation were to come down, do you think many of these merchants are gonna, okay, since inflation is down, my costs get lower, then I start decreasing my bak chor mee price? I don't think so. So that's why they say inflation is sticky. Once the price go up, it only goes up, it won't come down, like from the merchant's perspective. So that's why I also think that as long as it doesn't spiral out of control, if it spirals out of control, then it's a worrying concern.
I'm just curious, Chiking, because you're relatively young, right?
Sure.
For you to say that inflation is very sticky, right? Do you know it as a theoretical, like someone else has tell that to you?
Right.
Or did you kind of experience it in your life?
Both. So I think literature-wise, I mean, because we are in the markets, right, and we are finance creators, we're supposed to know our stuff.
No, we are entertainers.
Okay, sorry, we are
Clowns.
yes.
Clowns.
We are don't tell. So we are finance entertainers, but I mean, at least we want to say something and then we want to back our claims up, right? So in terms of literature-wise, I've been reading quite a lot.
Okay.
Now on the second part is, my parents are quite old already, so there's a lot of like knowledge transfer.
So it's not really a first hand, like for example, right, like for when I was a kid, right, when I go primary school, I buy 1 cup of drink is 10 cents.
I buy 1 bowl of noodle last time is $1. It's the same. Now 1 bowl of noodle is how much? Like when I was in primary school.
Primary school is like $2.
Yeah, I bought $1, so it's 100% yon.
Wow. Okay.
Inflation,
So
right?
you kind of experience it for yourself.
I mean, I never go back to primary school or secondary school, so I don't know what's the prices now. But I'm just saying when I was spending, I think my pocket money was $2 that time, and it was enough. $2, what am I gonna buy today?
That's
One
why I tell
bubble
my
tea?
son. He says it's not enough.
It's not enough.
I gave him
think
$2.
it's not enough. Yeah, it's not enough. I think it's not enough. So,
Yeah,
but your take on inflation, interest rate, and 2023?
Okay, so I personally I think and I really hope that you will hopium. So I hope that you'll come down below 5. Like I'm looking at second half of the year, I'm thinking that there might be a slight pivot. I'm thinking that they may cut 25 basis point, like maybe the second half of the year. I'm not sure when, but if the inflation number comes down quite significantly, maybe below 4%, they may cut 0.25 to stimulate the economy because of all the job losses and everything. Yeah, so that's my take. Yeah.
But why would they cut if it would bring inflation back up?
I think it's a little bit of political showmanship also, because basically if the economy is suffering, right, you don't want the president to come to you and like, hey, what are you doing to my economy? Like I need to get re-elected or whatnot. So they need to like, the 25 basis point won't do much basically, but it will help to send a signal that, hey, we care, we care. We want to lessen your burden, let's cut 25 basis point. So I'm seeing like, okay, so that's a kind of a dovish tone going into the second half of the year. Yeah.
Basically saying that we actually don't want all of you to lose your jobs.
Yeah, this is just like virtue signaling. It's not like it's not gonna be significantly helpful, but it's at least telling you that yeah, we care.
I think bottom line is, right, whenever you recently I think in the last 6 months to a year, there's been a lot of discussion, right? Interest rate, what the Fed is going to do, CPI, manufacturing, blah blah blah.
Everyone becomes
Let's
economists.
everybody suddenly overnight, right?
We
all
are
has a
forced to learn.
PhD.
We are forced to learn.
Right. But learning, right, and executing is two different things, right? Like
Yeah.
a lot of people are taking into account, well, what's the CPI rate today, whether I dollar cost average, whether I buy more, I buy less. At the end of the day, when you talk about investing, please stick to your principles. If you DCA, just DCA. If you pick stocks, just pick your good stocks and just.
But we need to
have
be
a margin of safety.
situationally aware.
Right. I mean, I'm not against understanding that. But when you start incorporating all these numbers in your model, then your model start getting more and more complicated, right? I'm afraid you don't even know what you're doing anymore. Like you just say, oh, because CPI is this number, that's why I trade in and out of this stock.
Yeah.
I mean, I'm just cautioning against that. And also there is this trend now, everybody's moving to fixed income, right? Everybody's buying bonds and what. I would just like to think that, especially for younger viewers out there, we can see our numbers, right? So, a lot of you are in the younger demographic. If you have a time horizon of 40, 50 years, I don't think you should stick your money into bonds. I mean, for emergency funds and stuff, yes,
Yeah.
go ahead. Like if you have short-term need. But if you don't need this money for the next 20, 30 years, I think the equities market is still the way to go in order to compound your wealth. I mean, if you don't want to pick stocks, then S&P 500 or Nasdaq, whatever.
But so some of them are thinking like, if the risk-free rate is about 4%, right? So
Right.
why should I risk putting my money where you can go down like 50% in half a year? Like,
right,
I
so
just put in.
so that's why here's the time horizon thing. So the time horizon thing is, if let's say 4%, okay, 4% is very short term. So let's say you look at the 10-year yield, like it's 3 point something now.
3 points.
So you're locking in your money at 10 years for 3 point something.
Yeah.
So I'm saying that in 10 years time, I'm expecting equities to return more than 3%. That's my baseline assumption. So if you don't need the money, you're already intending it to lock it in for 10 years, then let's not forget that if risk-free increase, actually stock prices come down because everybody's expecting greater returns. So that's why I still think that equities is still the way to go. I mean, in the long run,
In the long run, so
Yes.
you don't advocate like all in
I don't
DCA
advocate
now.
in out. I don't advocate coming in and out, trading options up and down, and saying that, oh, the lines don't look good.
So
and
you
then
just go
zao.
in and never come out.
I mean, if you don't need the money now, like let's say you have a pot of money, let's say 100K. Like, as a young folk, you are 20 plus, 30 plus. You have 100K, you don't need the money. You don't need it for housing. You don't need it for whatever, wedding or whatnot. Then you want to dollar cost average into a SPY. Go ahead. I think it will reap quite good rewards in the next 10 years. I mean, I'm still here after 10 years, so not good. You can come back and flame me in my comment section. I won't underwrite any risk.
Okay, flame him.
Yeah, you can flame me in 2033.
Chicken.
Yes.
Remember.
But I think that's that.
Okay.
In terms of like risk-free rate, right, 4% actually is not that hard to get. You don't have to lock in your money into bonds for 6 months, for 1 year. I mean, for the T-bills and SSB lah. If you just look at brokers, I've been talking this on my channel for a while. If you just look at brokers, right, just by putting money in the broker, they are already giving you about 3-4% or even 2% on the low end lah. But 2% is just losing. Not earning that extra 1% is a small price to pay for more liquidity lah. So that's currently my plan. I'm putting most of my money into brokers.
So one such example is actually a MooMoo Cash Plus account. So if you to log into the MooMoo app and go under the fund category, you can see that they usually have two main offers. One is the CSOP USD Money Market Fund, and the other one is the Fullerton SGD Fund. So both funds are currently yielding around a 3.6 to 3.7% yield based on the past 7 days record. But do take into account that even though this is quote-unquote low risk, there is still some sort of risk involved, even though it is extremely liquid. That said, for those of you who haven't created a MooMoo account yet, we have an affiliate link for the backholder pod, so feel free to use the link in the description box down below. For new signups, if you're to deposit at least 2,700 Singapore dollars, you can spin the wheel and get potentially an Apple share for free. And also, for those of you who wish to take part in this MooMoo Cash Plus activity, so you can get a $2 cashback every day for 10 days straight, and that's an additional $20. So terms and conditions applied, of course. So feel free to check the link out in the description box down below. Now, back to the video.
And I suspect that this market recovery might come faster than we think. But because like most of the money right now have already switched to value stocks. If you look at companies like McDonald's, right? Yes, it is currently trading at around the same PE ratio as Tesla.
Wow.
So something to think about. There.
McDonald's is better than Tesla. No lah. Just
So-
Burgers.
So that means
Yes.
that like all these value companies are overvalued now. And what happens if the institutional investors think that a recovery will come soon? They will definitely pivot much faster than us back into growth stocks. So, I would think that this pivot will be much faster than all the previous recessions lah. That's what I feel. So you don't have to wait. Just DCA as normal, and I think you will catch the uptrend faster than what most people think lah.
Just know what's your time horizon and just craft an investment plan accordingly. If you need the money in the short term, don't play with equities. If you don't need the money in the short term, you have 10, 20 years. Throwing everything into the SPY now, I mean, sure, it looks stupid in hindsight. It might go down 10, 20, 30%. Truth be told, nobody knows. Nobody knows where the stock market is going to go. So don't try to
Unless-
bother punting. Unless what?
Unless you're better than God.
Yeah, unless you're better than God. But I think I want to pivot over, right? Our discussion, right? I want to have your thoughts on China market. So the Chinese market is like the reverse of the US market. You all talk about QT, China want to QE. You all talk about increased interest rate, China want to decrease interest rate. Then you talk about high inflation, China inflation is 2%. So then when you look at this kind of disparity, are you not going to put money in China, or do you think it's a loss, uninvestable? I just want to get your thoughts.
I think for China, I would say one positive, one negative.
Okay.
One positive is of course the reopening. So the reopening came like much faster than I expected. I'm a bit like not following Chinese news that closely, and suddenly everything is opening up, right? So for example, like actually quite a number of people in China, especially I think big cities, they already caught the COVID. So right now, let's say talking about 3 months, maybe they are still in this adjustment phase. And after that, everyone got the COVID, then I think they were just reopening and things back to normal, and all this is good for business and so on. So I think this is the positive part, and sentiment will follow accordingly. The negative part, I think, is the real estate, which is the big unknown there. Like we know that this real estate has been their saving vehicle for many, many years. But after the government go and poke the real estate market, and now it looks a bit shaky. So I don't know what's going on with the entire real estate market, but it looks quite scary. If things become bad, it can turn worse. So that's the part that I'm not saying I'm bearish, it's just that I don't have much visibility on. So I think that is something that could affect the entire economy. So something to think about.
Right. What about Eric?
I think China now, right? For me, I'm a little bit of a TA guy because China, I don't know the FA lah, to be
Right.
honest. Like FA, I got to ask Chiking, right? But for the TA, right, if you look at the charts, I think they are turning the corner. It looks like the chart is turning back up. They're pretty resilient even when US side is selling down. So I think if you don't mind like having a bit of exposure to China, now will be a good time to toe deep in. It's past the maximum fear, you know. That time after the party congress, everyone was like, no, it's all. So I think now we are past that stage. We can kind of a little bit look back at it and see that as the point that we will pivot over. So I think if I have extra cash, which I actually don't, if I have
Because you bought too much Tesla. Sell Tesla.
No lah, I can't. I have to
Okay.
backhold it because I'm a loyal diamond hand
Okay.
Tesla shareholder. Okay,
Nice.
so in case you're wondering did I sell it, I didn't. I'm just holding it, crying a little bit like what Kelvin always does. But yeah lah. So that's my point of view on China. But I don't think I will go all in. Even if I were to buy a little bit, I would slowly take my time to scale in and not go all in.
What about Kelvin?
I think China, I've already said this in my video. I think China, the long-term view is quite strong. The world order thing where China will one day take over US. I don't think it will be that fast, but I think it's an eventual thing if US keep continuing its stupid stuff. Because like China there's the common prosperity, right? So everyone will just go up as a entire nation. And China is still doing that whole Silk Road belt, whatever
One
thing.
Belt, One Road.
Yeah, one belt, one road thing, which I think it will pay off over the long term. But on the downside, there's still the whole political risk going on. So right now my portfolio is too risky to do this kind of risky stuff. So for me, I will just like put into safer stocks first, at like S&P 500 ETF for like 50, 60, 70%, bring my Tesla down to 20, 30% so that I can sleep more better at night. Then I will start looking into other kind of risky investments lah.
Not
Like-
even China index. So
China index-
indexing.
Not so soon lah, because like S&P 500, I suspect the upside is much faster than China in the short term lah. So I intend to ride that upside,
Right.
then make my portfolio safer so that my wife is happier.
It's a recurring theme.
Recurring thing, right? Same for Eric. Then after that, let's see where it goes lor. I have no plans after that yet.
Okay, I think just to end off this entire discussion, right? 2022 has been a sombering year for many investors. A lot of people get to know what kind of investor they are. They get a clearer picture of what kind of risk profile they are. But I would just like to say that, just like I wouldn't say advice, but more of a general rule of thumb. If you came in with a strategy, the strategy didn't work, then I think it's better to reflect rather than just say, oh, I lost money, I don't believe in the stock market, and then okay, bye bye, everything I throw into the bonds. I think that's a pretty wasted opportunity. And I think the same thing happened in '98, happened in 2000, happened in '08. Everybody just say that because they got burned, they leveraged, they whatever, then I don't believe in this whole financial shenanigans and everybody out there is out here to get me. I think that's a very dangerous thought, or a very unhealthy thought. So yeah, I think no more discussions. So we'll close off.
Last question.
Sure.
Can I have your quick views on energy? Like, because winter is coming up, right? Like, so what will the energy
here
sector?
already, right?
You came already.
Winter's here already.
Is here already.
It's here already.
I don't feel it though. But yes.
Singapore is no winter. Europe has
Okay.
winter
So
already.
what's your view, Bunty? Like,
No, I'm not
Energy?
into energies. I think
Not in
energy companies no more. It's a commodities. I don't get into commodities.
yeah, actually, I initially I also thought that energy like has no future. You know, Tesla is going to transit the world into sustainable energy. Then I realized that not yet. They're not ready yet at all. They're not even like 20% of the whole global energy production. So yeah, I just want your views on what do you think like the energy sector, how will it perform like in this coming year, like with all the price cap from on the European side on the Russian gas.
Honestly, I have
No?
I'll just say no thoughts hit
No-
empty.
no-
I have no particular insight, but I'll just like to say there's key man risk lah. So basically it's based on a few actors how they want to maneuver the whole market. So today if Putin say that he don't fight war already, then okay lah, everybody stonks again. As in the rest of the market stonks, but energy goes down. But that said, I think based on current valuations, energy is quite pricey.
Pricey.
It's even Kelvin said McDonald's is is expensive, right? I think energy stocks are even more expensive, but they are
Oh.
pricing in a certain outlook. So I'm not gonna say whether the outlook is correct or wrong. We only have time to tell. But I wouldn't go and chase lah. I mean, when you buy Oxy when Buffett just entered, sure, go ahead. I mean, Oxy was pretty low. Now
Yeah.
after Buffett entered, Oxy is like up 150% or something. And then now you say you want to go and chase energy. I think that's a little bit too
Yeah,
late.
but because I did see people like talking about energy, like want to go in and all that. So
Yeah.
I'm just wondering.
That means times to get out.
Yeah, could be.
Everybody like to chase the next in thing, right? Wow, everybody now energy is the way to go. I wouldn't. I would stick. I mean, I've been sticking to Chinese tech for 2 years already.
No,
I
that's the
won't bother.
team now. You see, China. That's the team.
It takes a bit of time to brew for people to run in and everybody FOMO, right? I think haven't yet, but yeah, Calvin.
Okay.
Honestly, I don't care about energy. I think like there are a lot of ways to get rich, right? Energy is one of it. Crypto is one of it. Like personally, I would
Jump.
just saying I would I would believe more in Tesla long term than energy long term. That's what I think.
I'm not a Tesla shareholder, but I believe in Tesla more than energy. Just saying.
Okay.
Yeah.
Okay.
But energy, I think it's a short term play lah. So if you want short term, why not just go and trade the forex market instead, right?
So I think with that, hope you guys enjoyed the discussion. This is the first time we do a physical meetup. Quite hard to coordinate logistically, so we'll probably go back to Zoom again. But that's it. Hope you guys enjoyed the discussion. Remember to help smash the like button as always, and we'll see you in the next episode. Goodbye.